Hey there, everyone. Thank you for joining the spaces. We'll wait few minutes for other people to join. Uh, Thank you for listening. If you are listening live or if you are listening later on YouTube, we have a guest today, Vortex Foundation. They are a market maker and token advisor. Today, we are going to learn a lot about tokenomics and the Web3. So I'll now in, invite them to speak. Hey there, how are you?
Hey everyone, it's a pleasure to be here. Thanks for inviting us.
Yeah, it's good to have you here as well. Can you please introduce yourself and what is your background?
Yeah, absolutely. So I'm Gleb. I'm CEO of Vortex, CEO and founder of Vortex. I've been in the market making business since 2019. And basically, Vortex is a market maker and token advisor in crypto. We started off initially as an asset manager for Bitcoin, Ethereum, and highly liquid assets. But since 2021, we've transformed into a market maker for first, it was just a circle of friends and family. Then the business got bigger, then it got scaled bigger. And since this year, we're performing all kinds of services for token support, not just the market making kind of support, but actually tokenomics advising, tokenomics audits, smart contract development, token advising, and much, much more. So basically, we have transformed to this kind of what I mentioned in the beginning, a full token partner in this sense.
Awesome. Thank you so much for that intro. We are really glad to have you here today and learn from what you guys are doing and learn about the market. So, can you please define tokenomics and what role does tokenomics play in crypto project and growth of blockchain technology?
Yeah, definitely. So I would say that first of all, tokenomics is definitely, if we keep it simple, tokenomics is basically defining like how your token is being emissioned, how often does the unlocks happen, how often does and how exactly does the vesting happen, has it doesn't have a cliff, doesn't have a cliff, like how are your revenue streams going to be explored in the future. Basically, it sets the timelines and specific process how your token is going to be emissioned in the future. Tokenomics is actually one of the most crucial elements of the project when it issues a token, because if tokenomics is good, the token has this chance of surviving. But still, there's a lot of variables involved. It still needs good listings. It still needs good market making. It still needs good utility. It still needs good teaming, etc. But if the tokenomics is bad, then no matter what the token does, it doesn't have any chances of survival. If so, basically that's why tokenomics at the very start is the most crucial element for most projects, which actually is often devalued at the very start. Like often founders with which are launching tokens with little experience, they often devalue this step and they think that, well, tokenomics is what can go wrong with this step. Like we'll just make it, we'll just launch it, and we'll see how it goes from there. Unfortunately, that doesn't work. Tokenomics is setting the most important start. I would say for a lot of tokens, like for 99% of tokens out there, and making a good tokenomics is definitely something that's worth spending money on. It's worth consulting to experts, and it's worth starting to work with a market maker from the very start, rather than just making it on your own and then seeing that your token is falling into the abyss. Because as after you've issued a token, unfortunately, you cannot change tokenomics. It's already set there, and it's already decided how the token has been emissioned and who gets what exactly and when. So yeah, tokenomics is definitely a very important step for every project that's issuing a token in crypto.
So, how would we define a successful tokenomics? What elements does a tokenomics that is successful have? And can you please share some of the models that you have observed or you have been part of building?
Yeah, so I would say that definitely there is no, as in all elements of trading or crypto or like in general business, there is no universal success formula. Like obviously, Different strategies apply to different tokens, but in general, I would say that the goods economics always has some common features, and those common features include, first of all, it's very important, and that's probably the most important step, actually, the most important elements of tokenomics is defining the TG pressure. TG pressure basically refers to the potential selling pressure which the token might experience at the very launch. So basically, first things first, tokenomics actually defines when, in what amount, and how exactly are the tokens that were distributed to the investors, tokens which were distributed to public buyers, tokens which were distributed to private buyers, how exactly and what amount are they getting unlocked at the early stages? And basically, that's also a very important metrics for the investors and for the traders that are planning or are going to participate in the listing of the token. Like basically, if somebody wants to buy the token and is actually a qualified investor or is actually an experienced trader, first things they assess when planning to whether to buy or not the token at the very listing is actually they look at the tokenomics, and basically they assess exactly those elements: the TG pressure. If they see that 20%, 30% of the total supply is being unlocked right away at the very listing, obviously they understand that some pressure is going to be too much for any market maker for any project, and it's just going to bring the price down right away at the very listing. And it's not possible to basically make any profits on this very listing. And this will lead to, even though there's already a very big pressure at the very launch, traders that could potentially sort of like balance this pressure, they will not they will not buy the token, and therefore there is even less organic support for the token at the very launch. So first things first, it's very important to balance out TG pressure. I would say that the optimal percentage in our experience for TG pressure is something like 10% of unlock for every category in the uh, in the TG pressure. Basically, that means that private sale, public sale, and investor sale should be 10% of the total sale amount for the launch. If it's smaller, then it's obviously even better. But the optimal value is 10%. Next, it's also important for the project uh, to plan out the vestings and the unlocks for those vestings accordingly. So if the vestings are set each month for the next 24 months or 12 months, and basically investors get this unlock monthly, it's also pretty good because it gets the consistent sort of like consistent basis for the unlocks. There's no immediate pressure. It's always consistent. It's always steady. Like investors have no interest in dumping the tokens until they receive at least half of them, and it creates a balanced trading picture. But on the contrary, when once again projects make vestings for 3 months or once again immediate unlocks for those kind of tokens, investors just dump it right away. Like obviously it's a better market. Obviously nobody's expecting that token is going to do 100x at the very listing. So a lot of market participants are going to actually dump the token if they get a chance to get their allocation, 100% of their allocation at the very start. So in this sense, that's a second important step to basically plan out how your selling pressure is going to get unlocked in the next phases. And other things include the balance between the team allocation, between the investor allocation, between the public allocation, between private allocation, between the allocation for future rewards. If it's play to earn token, the allocation for some kind of in-game rewards. If it's utility token, the allocation for the DAO structure. And if that's some kind of other token, some governance token, maybe like the allocation for those kind of things as well. The other factors are usually dependent on the type of token itself, but the most important two things are planning out the immediate selling pressure and planning out the consistent selling pressure.
Thank you for that explanation. This is just my personal curiosity. How does, concept of inflationary token and deflationary token work? So right now, in last 1 year, we have seen ETH become a deflationary token, and in last few months, it has again became an inflationary token. Then you see other tokens like DOT, where there is a 10% inflation every year, and that is a fixed inflation. And then there are some tokens which are deflationary tokens. So how does being an inflationary token or being a deflationary token play a role in success of the project and the technology?
Yeah, thanks for this question. Actually, that's a very good question. I think that the deflationary or the inflationary characteristics, they actually depend upon the token itself. As you mentioned, for instance, like the second biggest token in crypto, ETH, is actually inflationary, right? While Bitcoin, for instance, is deflationary. That basically there's a model that if founders or if some investors or anybody else who's involved in token actually supposes that over time demand will grow for this token, then obviously being inflationary is actually not bad, because if you expect that the demand for the token is going to grow exponentially higher than the supply itself, then the inflationary token is definitely good. For instance, like tokens like ETH, obviously they are not expected to fail. They're expected to be a major part. They are a major part of crypto, and they are expected to be a greater part of crypto. Like obviously, ETH is major for NFTs. ETH is major for a lot of Web3 applications. ETH is major for all developers across the whole Web3. Like ETH is a major ecosystem, and obviously, as crypto goes higher, demand for ETH goes higher, and therefore more and more ETH are released into market. That's an algorithmic sort of like structure which does not undermine the success of the token. If we're talking about altcoins, which are not that demanded on the market, which are secondary to the market, then inflationary system can be quite bad for them, because obviously there is no guarantee that demand is gonna become higher for them if the total market rises. Like there is no guarantee that an altcoin which is ranked top 1,000 in CMC coin market cap is gonna go up, is gonna experience more demand once the market overall recovers, because honestly speaking, it's not correlating in the market in a direct way. Therefore, it's a very important decision, and I would always advise projects which are launching right now in current market or are planning to launch to choose deflationary models, because while deflationary model in its very existence is not a guarantee of success, it at least ensures that the token has limited supply. Founders, traders, and everybody else know that it's a limited supply, and basically they plan the decisions accordingly. So, in our opinion, in Vortex opinion, inflationary model is only suitable for tokens like it at the current market. Otherwise, it's just gonna create additional supply, which is not needed, because obviously there is much more supply than demand right now on the market in general.
Do you think, about games and about, gamify projects, do you think their token model should be different than, all the other cryptocurrencies? Should they implement a two token model, or what kind of token model, let's say Web3 games should implement?
That is pretty hard. Honestly, that's a pretty hard question. The question of tokenomics for PlayStation games is actually a major one. I mean, that's sort of like a riddle no one has been able to solve yet, because all of the existing models for PlayStation mechanics, if we're speaking honestly, all of them are still Ponzi. All of them are still basically dependent on the amount of new players coming in to be able to ensure profits for the current participants of the game. That's the model of Stappen. That was the model of Axie Infinity. That was the model of My Neighbor Alice. Like all of those major games are basically built in a way that the value of the token only goes up, and the value of the token is crucial for the ecosystem, because otherwise people get less rewards for playing if the token value depreciates. And the value of the token is solely dependent upon the development of the game in terms of growing its user base. So obviously, with the current model, that's not going to work long term. That works fine for some projects, doesn't work out at all for others. But in the end of the day, in the long term, it's not going to survive. And that's sort of like the question. That's a riddle people still have to crack. Once somebody comes up with the sustainable tokenomics for play-to-earn games, maybe it's the token model that you've mentioned, or maybe it's something else. But once they come up with this idea for an actually sustainable play-to-earn game for at least like 50 years, that is going to be a total game changer. I don't have the universal answer for this, unfortunately. I don't think anybody does at this phase. Otherwise, they would have created the game for with this model. But the current model definitely will not work in the end of the day.
Yeah, it's definitely one of the tough questions. And even in Web 2, people have not yet figured out what kind of right, in-game token model works in Web 2 games as well. And Web 2 is a much easier concept than the whole Web 3 uh, games. So yeah, thank you for answering that. So now let's talk about NFT. So NFT market in last 12, 16 months has been on a decline, and currently we are seeing that most of the NFT projects have lost their value. They are not nearly as much as they were at the time of their peak, and things like that. So in such challenging times, what are the opportunities, and what are first of all, what are the opportunities you see in this market, and then what are the challenges do you see for NFT to go back to the place it was?
Yeah, that's definitely the important question for space. The last part of the question, especially, what does have to happen for NFTs for them to go back up? Honestly, that's obviously the position of Vortex. There's no guarantee that that's exactly the only right market assessment, or that's exactly the thing that's going to happen. But we honestly analyzed this quite a lot. We even wrote a number of threads about this, some analysis about this, some articles about this. So we have a lot of NFT client-based clientele, some projects that are working with loans, some projects that are working with NFTs themselves, collections themselves, um, and a lot of tokens that are a lot of projects that are building games for NFTs. So like we have connections in this kind of things to basically analyze the most important thing we need to analyze. How is the revenue speaking in terms of revenue? Like how are the projects doing? And the answer is that nobody's doing right. Nobody is doing great in NFTs right now. There is no project except maybe Yuga Labs, which is actually earning money on a consistent basis with NFTs, except for maybe Yuga Labs and Budget Penguins. Like only 10, maybe 20 projects in NFTs out of all others are actually earning money on a consistent basis from their revenue streams, from their Web2 revenue streams, Web3 revenue streams, but not through additional mint models. Like basically, the current model with NFTs was and is that projects are basically issuing their collection. They're issuing their collection, whatever the supply is, 10,000 supply, 5,000 supply, like whatever they issue, for instance, like O2 ETH price. And mint price, and basically they collect money for the mint. They collect money for the uh, initial offering of their NFTs to the public buyers. They get some money for development. Then they understand that was how basically the bull run was created. Like then they understand that those money are not enough. Those money are not enough for developing the game. Those money are not enough for developing the sustainable products. They initiate more mints. They initiate more collections. They initiate more additions to their ecosystem. Like they sell merch. They sell additional NFTs, they sell additional products, and they collect more money. And basically, the model was centered in a way that all NFT projects are just living from basically collecting more and more money from holders and the community on a constant basis. Even the old blue chip projects like Doodles or Clonics or like all those kind of things like Moonverse, even all of them understood that basically they were living off this very same model, and that's why sort of like the value depreciated over time as well. Because once liquidity became thin in Web3, like a lot of projects just failed simply because they cannot raise additional capital from the public buyers or the community. And the projects that succeeded in actually building some stable revenue streams, either in Web3 or outside Web3, doesn't matter. Like Budget Penguins or Yuga Labs, like they are they are doing good right now, and they're actually building something. But to be honest, that's very horrendous statistics for a space when like only 0.1% of the whole space, 0.1% of the total number of projects is actually building something. That demonstrates that NFT 2021 was purely hype driven. There was like a lot of hype involved. There was a lot of FOMO involved. That was basically like people just very greasy to make some money. People very greasy to make some money on the mint or some NFTs. And we still think, I personally and the Vortex as well, that NFT space has to go through a lot right now to basically see at least something close to the previous all-time highs. It basically has to see that the major projects that are still not transitioned are actually transitioned to some new business models. Like obviously Azuki ecosystem or obviously some other blue chip ecosystems, they have more than enough capital to build or explore those revenue streams. Like basically wager into some kind of opportunities to leverage their current financial situations into something into something that is actually going to be able to produce some stable revenue streams. Apart from this, NFTs also offer quite a lot apart from just PFPs. NFTs initially was actually a very great technology for a lot of solutions, even real world ones. Like for instance, right now we're seeing the rise in popularity of real world assets, RWA. They're actually becoming quite popular in Web3 and Twitter in a lot of spaces, even outside of Web3. Um, that's also something that NFTs definitely have leverage to because real world assets are usually sold as NFTs. NFTs has a lot of potential, a lot of utility, a lot of solutions, which are also lying outside of GPAs, outside of PFPs. So I think that people have started sort of like looking into NFTs in a more technological way first for them to be able to actually provide some utility rather than just an investment opportunity.
Yeah, I completely agree with all, your assessment that there are lots of projects who can do a lot in NFT space. Recently, we have seen Pudgy Penguins do a lot of things, making real world products, connecting them to the blockchain, doing at least some sort of technical innovation and experimentation in terms of NFTs. So we would love to see more and more project to that. So in what ways do you think NFTs will impact industries outside of art and entertainment? I know you just spoke about real world assets, but yeah, if you have, are you seeing NFTs impacting any other industries?
Yeah, I would say that definitely real world assets first. The ones I mentioned, definitely that's a major sector. And if it was to be expanded, then I would say that um, basically NFTs have had and have a lot of potential in terms of uh, making some things we do every day more efficient. There was a lot of plans for basically making some real estate purchases or sellings for NFTs. They A number of them happened, like too small to be able to scale it, but they still happened. And if there is going to be some regulatory framework, clear regulatory framework on the property rights, on the ownership basis of how those NFT purchases are actually assessed by the law, then I think that for some international investors and foreign investors that are looking to buy property in foreign countries, NFTs definitely have a utility to make real estate purchases easier. That was a major topic in 2021. It's not it's not now for some reason, but that's definitely a major utility case that can be explored and probably will be explored in some future, but it's hard to say well exactly because it solely depends upon the regulatory framework of how NFTs are exactly considered by the law. A lot of documents, a lot of like use a lot of documents submitted to governments, a lot of IDs and etc. is obviously also in the ideal world can be at least somehow influenced by NFTs. Like obviously, it's much easier to not only NFTs but also soul-bound tokens as well, like SBTs. They also can greatly contribute to sort of like those kind of real-world utilities where people have once again the ability to just have their SBTs in their wallets. Like this is going to be their ID, that's going to be their passport, that's going to be like their ownership rights or etc. or something else. That's also something that is definitely going to be explored in the future. Hard to sell when exactly, hard to sell in which areas exactly, but that's definitely just something that NFTs can help with as well.
This space was downloaded via spacesdown.com. Visit to download your spaces today.
And also, obviously, NFTs are a great source for crowdfunding, fundraising, for movies, for art, for some other things as well. Potentially, there were cases when NFTs helped raise money for Hollywood. There were cases when NFTs helped raise money for content creators. Like, obviously, that's also something that NFTs have provided value with. A lot of artists, a lot of musicians, a lot of even film directors. Like they found, especially in the bull run 2021, they found that it's much easier to raise money through NFTs for their projects than it was to raise through traditional sources like Kickstarter or other crowdfunding platforms. So definitely those three, I feel like they are definitely great utility. They demonstrate that NFTs themselves in a nutshell is a great technology, and I'm sure that even more is going to come. Like obviously, as the world transitions more into the as this is going to happen inevitably anyway, like, sooner or later, like as the world transitions into the online system more and more, like basically where we'll have something similar to having digital identities for not only like our hobbies or our extracurricular time in this sense, but for our jobs as well, for our lives as well, for our some activities as well. Like as the world transitions more into this computer phase, computer I would say history. NFTs are definitely going to be more important as well in terms of digital identity. Right now, a lot of projects are bragging about the digital identity or like PFPs being able to identify people. Like that's not that's not important, unfortunately, until the uh, majority of people in the world is actually spending at least half of their day in the those kind of Web3 space, I would say. But that's definitely going to happen someday, and it's definitely going to also bring more value to NFTs.
Yeah, I agree with that. That lots of business are going to transition from their old models to new models. Our identities are going to be digital, at least for the online space, and a lot of those things. So now, what would be, let's say, right now Web3 has a lot of user interface issues, lots of hurdles when you are trying to onboard new users. There are lots of bad actors in the ecosystem as well. So what would be a primary advantage for a Web2 company to transition into Web3?
Yeah, so there's actually a few things. There's a number of things, and with Vortex, we actually help some of the Web2 companies transition into the Web3 world in a number of ways. But definitely, if we're speaking about like generally speaking, then there's actually a few things that Web2 companies can benefit from in Web3, and those are first things first. It's a token. Token is a major component of any kind of Web3 operations, any kind of Web3 sort of like I would say way of things, because it even doesn't matter if that's the NFT or the token as crypto or something else. Basically, tokenizing your aspects of the business can turn out to be a great leverage for some Web2 companies that are looking to also build additional identities in the IT space. Like for instance, if that's something that's we see a lot of fashion brands, for instance, like Adidas or Nike or other companies leverage their opportunities to Web3 as well for tokens, for NFT collections, through potentially other endeavors as well. We might also see in the future, and sooner or later, that's once again inevitably going to happen, that we'll see that car companies as well. Like we've already seen Porsche or some kind of limited opportunities, but car companies, manufacturers, and Apple other Sally giants, maybe some watch producers as well. Basically, all those kind of companies that are building products for people are gonna consumer-based products are gonna be leveraging more and more opportunities for Web3 as well, because that's basically exploring and that's basically expanding your clientele, your potential leads in a completely different space. Because for instance, most of the people in Web3, like they're just they're just different kind of people. Like if you are a Web2 company that is building, that's for instance what most of the high end fashion companies did. If you are in Web3, most likely you're not just somebody who's like looking to buy Chanel or Gucci on an everyday basis. Like mostly you're somebody who's rather buy PFP for 3K than shoes for 1K. Like that's the reality of Web3 people. Like they're not eager to spend any money on fashion. They're not eager to spend any money on expensive watches. Like they're mostly like degens. They're mostly like myself or most of the listeners or everybody in Web3 space. Like they're mostly looking for fun ways to spend money. They're mostly looking for fun ways to spend their time. They're not looking to buy an expensive watch. And when those kind of companies leverage their business models towards Web3, they're actually acquiring some new clientele of people who have not yet considered buying their products, but probably might have once they see that their NFT collection is cool, or once they see that their product's actually cool. Like those kind of things is basically a source of cheap marketing for Web2 companies, because it doesn't cost anything for Chanel or for Gucci or for Dior to make an NFT collection. Like that's $1 million for them. That's $500,000 for them. That's nothing in terms of their revenue in monthly and annual basis. And that's much cheaper than any kind of marketing that they do. But basically, that's the very important sort of like source of client acquisition for them potentially in the future, especially when the market is going to recover. I'm sure that more and more companies are going to explore Web3 as basically a source to attract new customers.
Yeah, definitely. So let's talk about Vortex now. As you mentioned at the start, Vortex provides market making solution in the crypto space. There are lots of market makers out there. So how do you guys differentiate selves from other market makers?
Yeah, that's actually a great question. I get asked this a lot because obviously I'm involved into promoting our services. Actually, there's a number of things that Vortex does either better or different from our competitors. I would say that in briefly speaking and shortly speaking, it's actually providing the most competitive services on the market right now for actually a cheaper price. Basically, the model that we have built, there is first of all, there's two different business models in market making business right now. So there is a business model of market makers working with their own liquidity on the low basis or on the option basis, basically where projects provide tokens and market maker provides USDT. And the market maker is basically just a trader. It just provides liquidity and it just ensures that there's an efficient trade environment for the token. It doesn't help anyhow with promotion. It doesn't help anyhow with attracting new buyers. It doesn't help anyhow with sort of like new listings or etc. Like anything related to trading, it does great. But other than that, it just doesn't help anyhow. Vortex is a second business model where a market maker is sort of like a full partner for the token. If there's new media opportunities involved, Vortex helps with that. If there's new listings opportunities involved, Vortex helps in it. If there is some kind of new advice involved, maybe token wants to issue new utility or update website or etc. Vortex helps with every aspect of the market because the token is not just the chart, the token is not just liquidity, the token is not just volume, the token is all in combination. The tokenomics, the marketing involved, the utility involved, the activities involved, the team involved. Like Vortex helps with all of those aspects. And among the market makers that are operating on a similar business model to ours, we're actually offering the most competitive services for the cheapest price. And that's the model because we understand that a lot of tokens, a lot of projects are struggling right now. A lot of projects are actually struggling to maintain their daily operations, maintain their cost-wise, their employees, their spendings on development, and we don't want to be a burden for them. We actually want to earn money for them, so we make sure that all of our services are affordable for every kind of every project, even if it's not doing so good right now. I would say that that's the most important aspect of our business.
So, on your website, there is a mention of machine learning algorithms that Vortex uses for their clients. Can you share more about them and how they have evolved over the years?
Yeah, absolutely. I obviously can't share all the details, but in terms of speaking about the machine algorithms that we implement at Vortex, there are several tools that basically make our markets efficient and make our trading strategies efficient. Shortly speaking, they are assessing the market on a daily basis for years and years and years. Like for now, since 2019, they have been implemented in the market. They're assessing multiple markets. They're assessing top 100 markets. They're assessing top 1,000 markets. They're assessing some very minor coins. And they're just slowly learning about some of the process involved in trading, some of the patterns involved in trading, because the patterns and the behavior of the market for Bitcoin and for ETH is much different from the market behavior for, let's say, even XRP. And the behavior of XRP is much different from the behavior of Engine Starter or any other token that is like top 500. Basically, in crypto, there's a problem that a lot of assets, a lot of tokens are low. They have low liquidity. In the stock market, practically every project that is listed in the US, for instance, has at least $1 billion market cap. In crypto, like most of the projects that are there, like 99% of projects have less market cap than $10 million. Like obviously, that's very low liquid assets, and it's very important to adjust the strategies that you use individually for every category of those assets, because you cannot apply strategies that are used for S&P 500 in the same way for top 2000 token, which has market cap of $5 million. That's not possible. It's not going to work because there's not enough data, there's not enough liquidity, there's not enough activity there for it to work. Therefore, our machine learning algorithms, they're actually involved in the market on a daily basis. They're observing the operations and they form patterns, historical patterns, and make predictions based on those patterns that they expected to happen with the combination of the macroeconomic data that we provide and fit to it every day.
Thank you so much for that answer. Uh, So you said earlier you were providing some other types of services, and now you have moved on, and your company, the whole Vortex Foundation, has evolved. So, what were the challenges that you faced in your early days, and how did you overcome them, or how did you adjust to them?
Yeah, there's a lot of challenges when you're building a business from scratch. Obviously, it's not an easy task. Obviously, it's not something that everybody can do. There were a lot of challenges, especially in a business like ours. Market making is not just a easy business. It's not just a business where you can answer without background, a business where you can build a team from scratch. Like that's a business where a lot of knowledge is involved, a lot of experience has to be involved at the very start, a lot of experienced team members have to be involved at the very start. Like that business is very hard to start. Therefore, obviously, even though we were starting it with a very experienced team, with a very experienced, myself included. Like I was a market maker prior to starting my own market making company, but there was still a lot of challenges involved in this. A number of challenges which include no, but that's the common characteristics for our business. Nobody wants to work with you until you have a number of cases, proven success stories, proven experience. Nobody wants to work with a new company. Everybody wants to work with companies that are already well known in the space. And that was a very major milestone, which was yet to break in 2021. But I would say that the factor that contributed to breaking those challenges and actually overcoming them was the fact that we had, as I mentioned, a really good experience in the space prior to this, and we were able to attract some customers we worked previously with, some customers, clients we worked with when we were part of other market making teams. Basically, they followed us when we created our new agency, create our new company, and we were able to build the initial client base based on our proven track records of personal trading records, of personal success stories as a market maker. And we sort of like attracted all of those customers. We built a small but actually quite good and quite solid client base based on those previous achievements. And we used those cases later to leverage our experience, leverage our case studies, leverage our track records in terms of providing some success stories for our customers. And initially, the client base grew and grew and grew. And even though right now the market is obviously not good at all, the fact that we're providing cheaper services now than our competitors is actually a major factor why a lot of projects are still signing with us. And even though the market is not good for most of the projects, we actually this third quarter of this year and the current quarter are actually the best for Vortex so far. We're actually close to most amount of clients with it in this specific month and the previous months. Vortex is growing exponentially every quarter, every financial quarter of the year since 2021, and that's a major milestone which we were able to accomplish and which we're really proud about.
So, where do you see the future of decentralized trading going? Like, what is your vision for future of decentralized trading? And I assume all this market making is mainly happening on centralized exchanges, maybe. Please correct me if I'm wrong, because I'm not really aware about this whole concept of market making on decentralized exchange. But how do you see the future of decentralized trading, and how do you plan to stay at forefront of it as Vortex Foundation?
Yeah, actually, even though most of our clients are on central exchanges, I would actually say that's not correctly, that's not fully true. We actually have a very important emphasis on the decentralized finance and the uh, basically leveraging the value that decentralized finance bring towards the customer, because the decentralized finance industry, it had failed people, to be honest, this year specifically and previous year as well. A lot of people are disappointed with FTX crash. A lot of people are disappointed with multiple hacks that happened on central exchanges. Like, a lot of people are disappointed. Like, not your keys, not your crypto is something that a lot of people are saying nowadays. That decentralized finance have a lot of answers. They're obviously not for everyone. They're obviously not going to be 100% of the market, but they have a lot of answers for people who are actually feeling dissatisfied with the insecurity and instability that centralized exchanges provide. Therefore, in this kind of in this sense, we leverage our opportunities even right now in decentralized finance. We have a lot of competitive services for uh, decentralized exchanges. We work with a number of projects that are solely listed on decentralized exchanges as well. And actually, we utilize a lot of algorithms which we have for initially developed for centralized exchanges to decentralized exchanges as well. I would say that decentralized trading is definitely going to be bigger in the future. There's no doubt about it. It's definitely going to be a major aspect of crypto in the next bull run, and it's definitely great idea and great opportunity to better it right now. A lot of projects we work with, a lot of projects we support are actually built their DeFi products right now. They got the funding this year or previous year, and they just have basically the vision of building the competitive services for DeFi until the next bull run, until the market recovers, and leveraging those kind of products when more organic interest is coming. Therefore, once the next bull run is going to happen, there's actually going to be so much projects with really good products that the DeFi is just going to not compare to the DeFi of 2021. DeFi industry is going to be much more developed, much more competitive than it ever was.
Yeah, 100%. So, on your website, it is mentioned that you have created over $100 billion in volume. Now, with great superpowers come great responsibilities. So, how does Vortex manages the risk associated with such large trading volumes?
Yeah, definitely. With great power comes great responsibilities. Definitely true. Uh, that's something that we work with as a market maker on a daily basis. With the risk associated with providing volumes, attracting new customers to create additional volumes, to attract new buyers, to create additional volumes. Like, that's one of the main priorities, to attract volumes to the projects. Like, attract traders that are going to create volumes, attract buyers or sellers that are going to create volumes, create some whales that are going to accumulate tokens. Like, that's something we deal with every day. That's something that we expand our network for, to make sure that we have enough traders, enough leverage opportunities, enough BD opportunities to basically attract investors, traders, community members, whoever it is, the the markets. And obviously, there are a lot of risks associated with increased market activity. Obviously, a token which is not prepared for this might experience a great spiral downturn. A token which is not prepared for it might experience uh, a lot of bad things. Like, I cannot even stress them enough. Like, if a token is just a random token with no utility, if the token is just a random token with poor team, then in terms of its execution, in terms of its knowledge, like, if a team just has no experience in Web3, like, obviously it's going to be providing such attraction for them. Obviously, going to be not a very good idea, because with zero experience, once great volumes, once good price action comes to you, like, you just might make bad ideas in terms of the business. But generally speaking, Vortex has a number of strategies. It has a number of predefined strategies, a number of liquidity provision strategies, which ensure that no matter what the volumes is, no matter what the market activity is, even in the most volatile markets, we're able to execute the strategies without any problems. We're able to make money on those strategies, and we're able to keep the market sort of like still in a stable, consistent manner without dumping on retail, without scamming the community. Because the most important thing for us is actually our reputation. And a lot of market makers, they just dump on the retail, they just dump on the community, they just basically make as much money for the project as possible, but they don't respect the individual investors. At Vortex, that's not our vision, and we don't think that dumping on the market is a good idea. We think that a balanced approach is something that is definitely going to bring more value to the market long term, and that's something that we utilize no matter what the volume is, no matter what the market is.
So, can you share some success stories or case studies in terms of the strategies and tactics that you have used to help retail traders or to help the project? What are the some of the things, if there is any case study or if there are any success stories that you have that you can share? I'm sure that there are some NDAs and you cannot really share much, but if there is anything that you can share, please tell us.
Yeah, absolutely. We are indeed on the NDAs. We always basically when we sign a contract, we NDA is always included in it, and we cannot share any kind of confidential details. But I can definitely share some of the cases without giving too much details. One of our recent cases was actually a very interesting project. It's listed on KuCoin, it's listed on Huobi, it's listed on Gate, a lot of good exchanges. Practically every good exchange except Binance, maybe. Actually, the token had an objective. It's the token is called Like. This token had an objective to basically increase its daily volumes, increase its traction, and it was very important for the product owner. He's very eager about the development of his ecosystem. He's very eager about developing his products. It was very important for him to leverage these opportunities and make sure that the product is developed and the price of the token accurately reflects the development of the product. Like that, the token is not at all-time low. The token is not at some really bad situation in the markets. Like it was important for him to make sure that the market is growing constantly. Therefore, we have developed a special strategy for them. And in September, which is historically the worst market for crypto, and in the early October, we were actually able to, through utilizing our strategies, through connecting the project with some BD opportunities, through connecting the project with some other exchanges or some other investors, some other traders, we were actually able to increase the price from, I believe it was sitting at 0.01 like this. We were able to actually raise the price from this point to 0.05, basically making a 4x on the market, which is historically actually the worst market for crypto in a manner that does not which does not influence the proceeds of the project, the profits of the project, or something else. Like basically, without spending their capital, without sort of like spending all the USDT they have, we were able to maintain a balanced strategy for the project to both raise the price and raise the profits which are associated with the price. As an end result, the token is sitting at a very good price. A lot of exchanges are eager to list it again. A lot of traders, a lot of whales are eager to buy it, and we still have plans of sort of like continuing the strategy because the product that is being developed is actually awesome. The markets that is listed on is actually awesome. Like Google and Huobi Gate, they are good markets for further increasing the token. And as the first quarter of next year comes, we actually have a vision that the markets are going to show at least some signs of recovery, some signs of good traction, especially closer to the Bitcoin halving. And we sort of like on all the clients that are actually building some liquid products, we utilize similar strategies of sort of like preparing them, accumulating tokens, raising the prices to prepare them for the upcoming positive traction on the market.
Hey, Glada, thank you so much for joining and sharing so much with us, being so open with us. Thank you so much for sharing your tokenomics experience, the experience around NFTs and market making. It was absolutely a pleasure to hear from you and learn from you. Really thank you so much for joining the spaces.
The pleasure is all mine. Thank you very much for having us. We'll be more than happy to talk about anything else in the future as well.
Yeah, awesome. Thank you so much. And to everyone listening, thank you for joining us on Twitter. And if you are listening on YouTube later on, thank you for listening to us. We'll see you next time. Thank you, Gleb. We'll end the spaces over here.
Thank you very much, and look forward to having something together in next time.
Yeah. Okay. Awesome. Thank you.
This space was downloaded via spacesdown.com. Visit to download your spaces today.